Welcome to Private Invest, your update and insight into how our investment funds operate and the opportunities in the private debt market in Australia.
Mark, the PrivateInvest Select Mortgage Fund, I wonder if you could talk me through that.
Yeah, it's an unregistered unit trust in Australia and offered to wholesale and sophisticated investors. It differs from the PrivateInvest First Mortgage Fund in that it's a fund but issues different classes of units for single loans. Right. So each of those loans have their own class of unit, which isolates the risk and the income to that particular loan, as opposed to being in a pooled fund.
What's the investment strategy?
Strategy is to invest into the Australian real estate sector. Again, just like the PrivateInvest First Mortgage Fund, in what we call the unloved $3 to $20 million bracket, the area that the banks or the bigger institutional investors don't want to invest in. It's different across different asset classes, whether it's in real estate asset classes, whether it's industrial, commercial, residential, in that bracket of $3 to $20 million.
Right. What's the target return for the fund?
That can vary with each loan, so we've got as loans come through and they're structured up, that we issue a loan memorandum to our investors, and that target return can differ with the risk and the profile of that loan. Like residual stock loans, where you're investing in real estate, could be as low as 6 or 7% net return to investors. Site finance could be 10% plus net return to investors. So it does vary on the different risk profiles of the loans.
How long is my investment for?
Yeah, unlike the fund, it doesn't. Like the pooled fund, it's you're investing for the term of the loan. So if you make a decision to invest, and the loan's 15 months, you're investing for the 15 months, and your money's returned after that period when that loan matures.
And how often are cash distributions paid?
Varies again with the loans. Generally in monthly or quarterly basis, but some loans could be capitalised to the end. But we tend to like loans that are monthly distribution to our investors.
With those distributions, can I reinvest them?
Not in the PrivateInvest Select Fund, and the reason is it's for a single loan as opposed to reinvesting your distributions into the pooled fund. It's on a select loan, and it occurs at the end of the loan for me.
Okay. When can I withdraw from the fund?
At the end of the loan term of the loan. Yes.
What management fees are charged?
Varies again with the loan, but as an indication, it's usually 2% of the total loan facility charged to the manager. There's usually about 0.25% of the total funds in the fund that's paid through the trustee, which is our independent compliance and governance oversight. And there may be some expense recoveries. That again is stepped out very detailed in the loan memorandum document that's issued to. So there's two documents. There's the investment information memorandum, which covers the PrivateInvest Select Mortgage Fund in its entirety, and then each individual loan issues a loan memorandum document that gives all the details around the particular loan, quality of the borrower, the type of asset, valuations, etc., etc.
Do these fees affect my return?
No, because the fees that we quote and the target returns that we quote are net of fees and expenses.
Mark, what's the minimum investment into the fund?
Minimum investment is $100,000. Investors should have a look at the online application process on our website.
Okay.
It steps through the process. Investors obviously can choose to invest at a higher level, but $100,000 is the minimum investment.
How do I assess my fees and return?
The information you would obtain in the first instance is the investment information memorandum for the PrivateInvest Select Mortgage Fund. That steps out all the compliance and the governance and the broad-based range of the fees, but because it's single loans in one unit trust, isolated from the other loans, the fees and charges are charged in the loan. So what we do is we produce a loan memorandum, which just steps out the quality and the qualifications of the borrower, the type of asset, what we're doing, and more importantly, or just as importantly, all the fees and charges that are charged to that loan. So then you're looking at, or an investor's assessing it on a net return basis from there.
Mark, you mentioned that the investment is only for wholesale and professional investors. How do I know if I am one of these?
Best thing to do is if you're already online on our website, go to the Investor Centre page, and it actually steps out what you have to do to qualify for a wholesale and professional investor. Generally, they'll need an accountant certificate to support that statement, but it's very important that they do qualify under ASIC guidelines for that. So I'd suggest they go, or call one of our investor relations members, and they're happy to step through the process and make sure they qualify.
So Mark, what happens if a loan were to default?
Well, we haven't had any defaults across our two funds to date, but it'd be naive to say to any investor, make a statement that you never have default. I think the first thing that needs to be done is ensure that when you're doing and understanding and doing your due diligence on the loans, that you're really crossing across all aspects of the loan and to make sure that it qualifies as a good loan and the strength of the borrower and the underlying asset. But however, again, something may change through the term of the loan that becomes a material issue for a borrower. Our first step is to roll our sleeves up and step in. I think that's what sets us apart from the mainstream banks and the bigger banks, in that we're prepared to work out. And if you're online and you can have a look at the credentials of our board and our management team, the technical skills of our ability to assist a borrower work through a stressful situation is strong. But also the other side of that too is it has the best outcome for our investors because we're preserving the capital and their returns.
It sounds like it gives investors a lot of confidence.
Well, there's no joy in just issuing a default notice to somebody and then just letting them, lose what their investment is too, because the borrowers will work very hard to create that asset.
Mark, what information do I get when I invest in the fund?
Yeah, very important. I think transparency and communication is very important for investors, so they can be across all aspects of their investment. The fund has numerous loans at any given time within the fund, so it's good for the investors to be across where they're geographically placed, the asset types and that. We currently produce a quarterly newsletter called the News and Insights, so that effectively covers both funds and it covers the performance and the distribution. The detail around their financial aspect, they can go online through our website and access through our registry services, they're called, which is another external agency, and they can view their distributions, their statements and all that information there. The other thing is because the fund is moving from quarterly distributions to monthly distributions, our News and Insight will be done monthly as of the 1st of July 2021. So the more that we can keep our investors informed, the better that we think that we're providing a good service to them.
Well, that's really helpful. Thanks so much, Mark.
Thank you, Pia. Thank you.
Thank you for watching Private Invest Talk.